Hello and welcome to the Trading Zone. I'm Joe Teague. Boy, what a busy morning. We got DeepSeek sinking the markets here off the open. Volatility popping. We saw VIX over 20 momentarily. This is what we trade for. This is the exciting thing. Seemingly like, man, maybe it felt like we've been talking about for some time that volatility traders were onto something. They were sinking into something. Maybe for a lot of people, this came out of nowhere this weekend, but the market had a sixth sense about this, didn't they, Brian?
Yeah, we talked about it. I was just on CNBC on Friday on Power Lunch talking about VIX up, market up, being concerned that I mean, it seems like with no fail at some point when you get that kind of movement and you see institutional hedgers trying to buy volatility as the market's going higher, there's a reason they're doing it because they're expecting either overvaluations occurring in the marketplace, something coming out or whatnot. And we got that this morning here. And obviously the markets have been quite crazy, especially overnight. I'm just looking over at my trading screen here. The S&P is up 80 handles, 80 points since the low pre-market, which is what is that, 1.25% or something move down and then back up. So we're sitting here at an interesting level. And look, the markets never sleep and things are moving. And to me, it just seems like maybe a valuation repricing. I don't know, Joe.
Yeah, well, let's get into it. We got more people coming. We're going to get into a deep dive on DeepSeek real quick, and we'll share what we think about what it really means for the market. We talk about AI every day. We talk about these companies every day. Some of them that are getting hit really big. So I think we have a good feel on this, and we'll see how it plays out. We're watching it very closely, of course. But yeah. Of course, big news coming out over the weekend. DeepSeek came out. Their big unveiling, launching on the world, and essentially, for the uninitiated, DeepSeek is a Chinese OpenAI company. They're an LLM company, and boy, they seem like they're on par with the U.S. For me, this almost, Brian, seems like a space race. A version of like going back to the 60s. You got a Cold War going on. We have like an economic war going on with China right now. Who's going to get to space first? When the Russians had their satellite Sputnik out there, that was really startling and scary for some people right off of the get-go. It seemed like they were ahead of us. And now it seems like, okay, China's saying, hey, we're a player here too. I know you're trying to limit the chips that are coming to us. You're trying to fight us on multiple fronts here, but we're a player in this arena.
Yeah, and the conspiracy theories around the space race. Obviously, did we actually go to the moon at that time frame, right? Did DeepSeek actually build a large language model for $6 million and uses basically no chips and no data centers to send their information across places? And whereas like getting to the moon might have been real, I don't know. This seems a little like crazy that they could do it for so cheap. That some money wasn't spent somewhere. It doesn't sound right to me at all.
Yeah. So the reason why some of the chip makers are struggling. So yeah, maybe that's a shot to OpenAI, right? Hey, we were able to do this cheaper than you were. But the reason these chip makers are struggling is because I guess some people are thinking, or the narrative is that that these LLMs are going to be requiring like thousands and thousands and hundreds of thousands of these NVIDIA H100 boxes, right? In fact, you think like Google's bought half of a million of these huge AI powered chips boxes from NVIDIA. Microsoft's 400,000. OpenAI has a ton of them. So the idea for NVIDIA is that they're just going to need to sell all of these huge data center chips to be able to train these LLMs. And OpenAI or DeepSeek just proved, hey, we can do this on just a fraction of these boxes. We don't need all these to do what they're saying. Now, whether they did that or not, is one thing, but maybe like one of the catalysts for the recovery this morning and the mini rally we've seen sparked off of the open here is that we saw news that DeepSeek went down. There weren't enough servers online for all the users to come and use their computers. And for me, that's always been the story. Yes, you do need these computers to train the LLMs, but you need more computers to operate the LLMs. When you go on ChatGPT or DeepSeek.net or whatever you do to go to DeepSeek, when you go on there, you talk to something that needs a server to think and talk to you, come back to you. And that's going to be true for all of these big corporations that is going to be using their LLMs. They're going to need cloud computing. That's the whole point of the build out. It doesn't make sense to me that they're going to be hitting on this, but we'll see how this spins around. Also companies like that are powering these data centers are being hit too. There's some power companies which are being hit today. So yeah, it's just an absolute plunge. It's just absolute carnage out there in the market, and it's all because people are just saying, "Hey, this trade war is on. This AI war is on. China's ahead of us. They're beating us. It's going to be able to do cheaper." Just like everything else, we can export to China for a fraction of the cost. We'll see if that plays out. Right now, I'm saying not so fast. There's a lot of questions beyond everything else with DeepSeek. How much of their knowledge was stolen? And yeah, I mean the headline. If you just break it down, the headline is just this: the too long didn't read. DeepSeek spent $6 million and they were able to achieve a product better than OpenAI. Now, whether or not it's better than OpenAI is up for a debate. It's got some really cool features from what I can tell. It spits out their reasoning and their logic behind their model. And yeah, it's just an up-to-date version of the LLMs. They seem to be getting better every single week. It seems like OpenAI is getting better every single week. Google's is certainly getting better very rapidly. So yeah, it's fascinating to see these developments. And they just have a very up-to-date model. Now, but that $6 million, which everyone is kind of fixated on, is not really accurate at all. They had a startup seeding of $6 million, but they have a founder, which is a hedge fund, Chinese billionaire. I'm not sure how much money he has put in, and they're not talking about the chips that came with him when he came over. So he had the NVIDIA chips when they started this company. They are not including that in their founding. So yes, they are doing it on fewer chips, maybe a few thousand compared to a few 100,000. That is what is impressive. But that is, there needs to be some scrutiny on exactly what they have done and what they're accomplished. And, we'll wait and see exactly how this all plays out. So that's my 2 cents on this. It is absolutely fun to see. That's why we do the trading at the end of the day.
Yes. Sorry, my camera went out. Who knows? Maybe this is all a big attack on our internet or something like that.
That's another thing with DeepSeek.
It
is censored. So if you want to know what happened in Tiananmen Square in the 90s, you're not going to find it from DeepSeek.
Yeah, right.
But you know what? That's not all that's going on in the market. Brett, I mentioned the market might have bottomed when DeepSeek servers weren't working so great. We also have other news going on in the market. We have more tariff wars going on out there. This weekend, there was a little conflict with Colombia. We sent some migrants back to Colombia. They refused them. We said, here's some tariffs. Colombia said, okay, maybe we can talk about this. So I think this is how we're going to be using these tariffs. We talk about them. Our president talks about them quite a lot, and he's going to be using them to get his diplomatic victories, using them very, very toughly. So that's going to be something, of course, we're going to be watching. Also this week, if you didn't know, Brian talked about it, was on CNBC, talking about the VIX was giving us a signal. Luke on Yahoo Finance, that's our other partner, Luke Ribari. You'll meet him soon enough. He was on Yahoo Finance talking about the need for owning some protection here. So always keep a lookout for equity armor when you can. Anyways, so what's going on this week? The week of January 27th. Basically, the month is already done. Can you believe it, Brian? If we can stay here, we'll still have a positive month for January. It's getting close though, so need to hold in here. We have a big week of earnings though. We got 20% of the S&P 500 reporting. Big companies coming up, so it's gonna be a big week. It's gonna be important. We'll see if we're able to hang in there. And next week is going to be another big week. We'll have jobs data.
Yeah, well, you see all those names reporting the week of January 27th. That's this week. So certainly these will be market moving events along with what's going on today. Apple in that bunch there, interestingly enough, is one of the tech names that's actually up on the day for some reason while everybody else is selling off. So obviously this is very AI driven. Apple really kind of more and more being viewed as not in the game at all in the AI LLM play. Their Apple Intelligence obviously was something that people expected to be kind of cool or something, but it's really kind of been a dud. And so it's really the other players in the sector with this DeepSeek news that have really been affected. And it's interesting that Apple, when you look at large cap value, maybe Apple is just that right now. Maybe it's just becoming a commodity with everything else. With the banks are up today. Large cap value stocks are actually up on the day. About flat, but slightly up. So certainly maybe Apple's now starting to move into that bucket. So it'll be interesting to see how earnings play out this week.
So another fascinating thing, Brian, we talked about last week how, and this was 2 weeks ago, we had the 1 week bearish high last week, and this sentiment that just flipped. And last week it went completely on its head. It went like from extremely bearish sentiment to extremely bullish sentiment. This is just really, really unusual flips here, and people are just, they're like running around like chickens with their heads cut off here. The retail is saying, "Hey, I'm really bearish." A week later, "Hey, I'm really bullish." That's a sign for some volatility for me.
Yeah, it sure is. And speaking of volatility, when we get into what the VIX means, what the skew means, what volatility is, and there you have it. We've been talking about this where basically the skew, which monitors puts versus calls, had been really making higher lows. So anytime we sort of got a markup in the amount of call buyers, the over exuberance to the upside, actually put buyers came back in, disallowing this skew sort of to get flat back where we were in 2024. So, that was a little bit of a concern, a little bit of a warning sign that we are continue to make higher lows on this skew index, meaning that put buyers are trying to ensure their portfolios once there's a rally in the market, expecting these levels of volatility. And now, obviously, put buyers today, freaking out and coming back into the market.
Yeah, boy, this was a quick turnaround here. This was a little bit of a clue last week. We were talking about it this very closely. We were saying, hey, we're watching this very closely. Earlier in the week, we were saying, hey, it doesn't look like this is turning around yet, but when this turns around, you're going to want to own some volatility, especially in the VIX. We got the clue, we got the signal on Thursday of last week. So Brian, another win for watching the skew here. So this is really really crucial.
Yeah, definitely. And then you kind of turn the page and look at like what the VIX futures are doing. I don't know if you have those live up, Joe, but we should probably talk about how much VIX futures jumped. I mean, our models were giving signals given the fact of the overexuberance of call buying that was occurring. Our model had been giving signals to own VIX. So we did just that actually on Friday, Joe. So that was really a nice buy by you for our clients. And when you look at the VIX popping today, it's fairly extended here. It's kind of interesting that the VIX futures are up really almost as like in line with where the VIX was. Now, obviously, these VIX futures were trading at a big premium to VIX, so on a percentage wise, they're not up as much as the VIX itself today. But both now are sort of moving lockstep as the day trades on. To me, it seems like I want to be a little bit of a seller of VIX futures, and so when we're looking at that for clients and how much we had on for them, I kind of tended to say, hey, let's take some of this off a little bit and wait to see how the rest of this day plays out. I think 60-20, 60-10 area in the S&P futures, March futures contract would be an area where if it falls back below there, maybe we could retest the lows from overnight or pre-market. If it kind of hangs in there, then maybe selling some VIX futures that we bought here, Joe. I kind of like what we did this morning.
Yeah, no, I love what we did this morning. Just the market for me just came in and everyone just bought the dip on the open. It seems like a lot of stocks were on sale. You're getting semiconductors essentially at their 200-day moving average. So you had NVIDIA close to its 200-day moving average on the open. Semiconductors this morning were below its 200-day moving average. They're back above it right now. So it's something to watch carefully. Now, that said, just because we're buying the dip now doesn't mean like it's going to hold. So this is just something we absolutely have to be watching this very carefully now. This is a notable move. Again, semiconductors down 7% plus on the open. We have to pay very close attention to that. And then just because, it doesn't seem like the story is completely right, maybe there's just a flip side of that. Hey, these valuations are high. It's really hard to justify these valuations. Maybe we're just having a little valuation correction. The story doesn't really matter so much. I mean, a new company isn't going to change the whole world that much. But maybe it's time to say, hey, around a 40 PE is too much. Maybe we can bring this back a little bit.
Well, by the way, you brought up semiconductors back to the 200-day moving average. I think this is why, last week the SMH was sort of in this channel. We said, look, it is breaking out. We would want to play it to the upside at that moment, but we did it using a call spread where we bought a near-term month call, sold a longer dated call. Now, what this means is if we move back down into the channel, which is sort of like a failed breakout, which that 260 level on the SMH was sort of our line in the sand. And now that the fact that it's gone back down into that sort of channel that it used to be, to me, is a signal of a failed breakout, which technical people just don't like that at all normally. But by having this sort of call spread on here, we're actually almost going to start getting short deltas, aren't we, Joe? Because on that trade, because now the near-term call is decaying in value, and the long-term call still has its short delta trade onto it. So sometimes you can express a bull trade and be wrong, and then not be so bad off.
Yeah, it's all about like the timing, the duration, and the momentum, of course. There's multiple ways to win with options, and I think what we were saying with these high valuations, it makes sense to look at these outdated calls and just kind of sell them, because even with great news from these companies, it's going to be hard to have another 2024, another 2023, where we're seeing outsized gains from these mega cap tech companies. It's going to be growing into them in their big earnings. But there's actually one company, Brian, that is a mega cap company that will be having earnings coming up soon, which does not have a PE in the 30s. In fact, their forward PE is actually around 21 and a half. That company is also playing in some of the futuristic tech, which we love to look at. And that company is Alphabet.
Yeah, and it is interesting, right? Alphabet, I think, is a cool one. We actually increased our weightings there for clients in Google, and you mentioned that 21 PE really looking attractive relative to the other people. I'm sure there's some sort of discount put in there because people are a little worried at their ad revenue with AI and LLMs. If people are using that differently now, that maybe the revenue stream that they have, which is really a majority of their business, won't be there. But I did actually think that, especially OpenAI came out with their agent that basically allows you to tell the agent what you want on the internet, and it goes into the web browser and browses for you, and then let's call it makes the purchase for you if that's what you were desiring. And so that would then sort of change the game and how people search and find things. And so maybe that justifies Google's lower valuation, but I think they're going to be a big player in all this when it's all said and done.
Yeah, I mean, they got a lot going for it besides just search too. They have big data centers. They own the data. They have YouTube, one of the largest streaming video players in the world. So absolutely, it makes a lot of sense for me. And they're not resting on Google search to be their cash cow forever. They are innovating and they are looking at new potential revenue streams, which is what's so exciting for me. And we got news like just a few months ago about their quantum chip, but they have even more down the line, which is exciting to me. So yeah, I want to see it, and I think their low valuation was due to their regulatory concerns. I think new administration that'll be lightened domestically might still be a worry going on in Europe.
Yeah, I'm not worried about the breakup of Google here. Before Biden administration ended their term, they came out basically saying, "Oh, we got to break up Google and Chrome and this and that." I think there'll be a little bit of a change of heart on that. I'm not so certain that happens. I think that's why we want to put this sell-off on and use this to have an opportunity to own Alphabet here. Joe, you got a trade that you put together here that maybe similar like our SMH, where we're trying to risk less to make more, and in a situation where we can play optionality to sort of play the upside, but if things don't go right, we've got some cushion. This is kind of a protective trade to some degree, even though it is a bull call spread. Joe, what do you got here?
Yeah, this is a type of a trade that'll risk less than owning the stock. Obviously, we got earnings coming up. Maybe they miss earnings. Maybe they drop down. I'd love to own it at 175. This trade will effectively make us owners at Google Alphabet at 175. But the rest of it is going to be owning the 200 call in February and selling a 220 call all the way out in July. This is exactly what we're talking about. Not looking for a 40%, annual return out of Google. This is just looking for a 10% upside in half of a year. I think we'd be thrilled, essentially, if we get that in any stock at any time. So we're able to do that with this trade. We're going to be collecting money, Brian, to put this on. Imagine that, get paid to own Google. Right now, Google 195, 196, buying it on a dip today for sure. I love doing that. I was 200 just last week. I think very easily you can race through there on positive earnings news. And I think 220 is very, very feasible to do so. Maybe it does go to 230 after earnings. Maybe it does race through there. All the better. We can just kind of sit and wait, let this premium come in, own Google 200, then, roll that 220 call up later on down the year.
Well, just to button this trade up here, this is a trade for earnings play. You get long the stock 200 and above through earnings. If Google doesn't end up above 200 by February expiration, we're going to have to update this trade because you're left with that short 220 call in July after that point. So we'll continue to update this trade, but I love this trade going into an earnings play. Hopefully there's a pop to the upside. If not, we've got some cushion to the downside where, Joe, you said you don't own the stock until 175 level. So I like this on a risk reward basis. Look, we've been here for 24 minutes already. Time flies when you're having fun. The markets are moving. I think we're about to wrap up the show here. Look, we have a new time slot. Hopefully you've turned in and caught our new time here, 10 a.m. Eastern every Monday. We'll be on. Continue to watch us. Our website is going to go live this week where you can actually buy a subscription to follow our trades, get a direct email sent to you when we update these trades. We don't have just not the weekly trade we give here, but we also have two other trade strategies that we're happy to employ and give you a little bit more information on. So go check out equityarmorinvestments.com. We're excited to offer that out starting this week. Get in. There'll be some discounts coming up too in the future here, so pay attention to that. But we loved having you here. We'll tune in every week here. I'm Brian Stutland here of Equity Armor Investments with my colleague.
Yeah, I'm Joe Tiga. I catch you every Monday here.
We'll see you guys next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.